In this series, we've already looked at current accounts and interest. We're now going to look at a different kind of bank account called a savings account. We'll be looking at what they're for, why you might want one, and how they differ from current accounts. I've talked previously about current accounts and how many current accounts will give you a very little amount of interest on the money you have with them. The reason this is that money you have in a current account can be taken out at any point, and so the bank can't really lend it out to people very easily, and so it's not worth that much to them. If, however, you commit to leaving your money with a bank for a certain length of time, or you agree to put in a set amount every month, then the bank will know they have money that they can lend to people, and they will therefore be willing to give you a higher interest rate. This type of account is normally known as a savings account. Savings accounts are offered by most banks, and there are different types with different features. The four most common types of savings accounts are instant access. Here you're able to add money to your account and take it out at any time. These are similar to current accounts that we looked at in a previous video, and because you can take your money out at any point, the interest rate you get will be lower compared to other savings accounts. Notice account. This type of account you can pay money in at any time, but you need to let the bank know in advance that you want to take money out, or you will lose interest on your money. The notice you have to give the bank will depend on the terms and conditions of the account, but typical notice periods range from 30 days to 120 days. Sometimes these accounts will also limit the number of times you can make a withdrawal in a year. Regular savers. With this type of account, you pay in a set amount each month. This can be good if you don't have a pot of money to save already, but you're able to put away a little amount each month. And finally, fixed bonds. This kind of account locks your money away for a fixed length of time, such as a year. These accounts normally come with a fixed interest rate that is guaranteed for the length of the time of the account. Generally, the longer you lock your money away for, and the harder it is for you to get at it, the higher the interest rate you will get. This is because banks will have more certainty about the fact that they have your money for a time, which makes it easier for them to lend. One thing to consider at this point is how safe is your money when you put it in a bank. Banks are, after all, businesses, and businesses fail. And while it's a very unlikely thing to happen, it is possible that a bank might go out of business, and in that case, your money would go with it. Thankfully in the UK, your money is protected under the government's Financial Services Compensation Scheme. This scheme covers savings up to £85,000. What that means is that if a bank went under and you lost your money, this scheme would pay you back whatever you lost up to the value of £85,000. If you're in the fortunate position to have more than £85,000 in savings, you might want to think about spreading your savings across different banks, as the scheme protects you for up to £85,000 per bank. So, now you know what a savings account is, why might you want one? Well, the main reason people have them is because they're a pretty safe place to keep your money, while also earning a bit of interest. Rather than having your money in your house or in a current account where it earns little or no interest, you can put it in the savings account, and this time next year it'll be worth more than it is now. Another reason people use savings accounts is that they help you save for things. People often have a number of savings accounts where they save for different items. They might have an account to save for a car, one to save for a holiday, another to save some money in case of emergencies like a boiler break-in. Rather than just having all your money in one pot, having different savings accounts allows you to clearly see what money you have for each item and allows you to manage it easily. Okay, now you know what savings accounts are and why you might want one. What do you do now? Well, if you decide that you want a savings account or even more than one, you need to work out which account suits your situation best and with which bank. Like current accounts, there are online tools that will help you with this, and I've put some links in the description to a few of these. Once you've decided what account you want, you will normally be able to apply for it online, and like opening a current account, you will likely have to go into a branch with ID and something to prove your address before your account is fully set up. Once this is complete, you'll get your account details and you'll be able to use it to save your money. One final point to note is that there are often special savings accounts available for children and young people. This is something to be aware of, as these accounts can sometimes offer very good interest rates. So make sure you look out for these when looking for a savings account that suits you. If you found this video interesting, please hit the like and subscribe buttons below. Also, if you'd like to be notified when I post a new video, then please press the bell icon. Finally, if you've got any comments or suggestions for future video topics, please leave them in the comments section below.